Hi everybody, so let's do a trade recap of the ES and crude. There were trades here and very easy, not easy, but actually these were a little bit challenging, but nonetheless, you know how to trade them, it's fine. So the market basically went and tested the 55-52 area right here, and over here it upthrusted. So before it went higher, it went lower on a higher time frame 4-hour chart. So as it pulled back, it gave the opportunity. It upthrusted 55-52. As it upthrusted, what happened? You had this selling. You had this selling. Now, in terms of volume, it's nothing, meaning it does not look like a change of behavior. So what I'm using is in terms of distance, it is a change of behavior because bigger than 1, 2, 3, at least 1, 2, 3, and possibly 4 waves, and it's a sizable wave. So I knew that this selling, especially where after it's big selling and it took out the low, that there's at least some type of trend change in play off of the resistance level offered by 55.52. 55.52 is the level, tries to go slightly above it and rejects. As it rejects, game on. Now, the problem here is that it pulled back once, right here. See it pull back? And it then went and made a higher high. So as soon as it reverses, you can take a trade. So if you get stopped out on the first attempt, there's a second attempt on the upthrust of this area. So this is your upthrust after distribution. All right, this is the situation. Upthrust after change of behavior is the same thing upthrust after distribution. All right, so here you have the upthrust after distribution, takes out that high, and rejects. As it rejects, goes down. And as it goes down here, and then you have this buying activity. There's the biggest volume and biggest in 6 waves and 2 times average volume, and it made a little higher high. So I know this is in play, right? Otherwise, it would not be able to hold and then break. All right. Now it comes back and does the same shit, springs this change of behavior. As it upthrusted this one, you have a spring of this change of behavior. So you can call it spring after accumulation, just like you call it this upthrust after distribution. That's what it is. The spring after accumulation, or spring of the change of behavior, whatever. Doesn't matter. You just have to know that this is a possibility that can occur and how to trade it. Why? Because this is bullish, biggest in 6 waves, 2 times average volume, pulls back. If you get in here, right, against these lows, because of the green bar rejecting this area, giving the low risk trade, you still have to consider the possibility that the low gets taken out. And that's what happened. Low got taken out, but I knew that this is going to go, that this is a spring. How do I know? Because it was holding. See the sideways action here? It's holding, and crack. Here, it just went up and then big bar down. So that you kind of know that it goes up, and where's the big green bar? It's not there. Instead, the red bars are bigger than the green bar, validating the upthrust. Just like here, when it goes down, the green bar is bigger than the red bar down, showing that the buyers are at support. All right, and then it basically rallied at the end of the day. So these are 2 trades on the ES. This is range trading, right? And you just have to get ready to sell upthrust and buy springs. This is how it's done. Second trade was here against this level. So you had a resistance level on crude. You had this resistance level. I think it was 81.90. 81.90. All right. Now look at what happened. What? Yeah, I think it was 81.90. And then here, as it was going through 81.90, yeah, it sold off and changed trend. Not changed trend, but made a lower low. So you have this low, high, lower low, bingo. All right, so it's making lower lows, lower high, lower low, against this area. So this was 81.90, sweep of 81.90. Initial selling comes in, offers the retest entry all the way up here. You just have to, just chill out, and then it gave a move down. Now these are not big moves down because the trend is up, so it's counter trend short. So you just have to kind of take the small move, even though this is like 1, 2, 3, 4 or 5 times the size of the risk. If you know how to enter, it's like 4 or 5 times the risk. Very significant, right? So after it did that, it just went the other way. So you just have to just scale out or exit or whatever as soon as you get an indication that buyers are coming back in, right? So you just anyway, so this was the upthrust trade on crude, where 81.90 got swept. Selling came in on the lower time frames, offering a retest entry for a swing opportunity. And on ES, the two opportunities, 55, whatever this is, right? 55, that was 5552, sweeped it, selling pressure comes in, get it on the retest, take it to the lows, buyers come in, get it on the lows, on the spring, ride. Okay? Now I'm going to go into this. So this is, just one style of trading, range trading or upthrust swing trading, whatever you want to call it, right? So you just have levels, right? So highs and lows, and you just mark them on a higher time frame. Could be whatever higher time frame. And because in Wyckoff, you're always trading support and resistance, right? That's what Wyckoff did. Even when he was talking about day trading, he was actually looking at daily support and resistance levels. At least that's what he mentioned in the Division 2 course. Anyway, so the market makes a high, you draw. Market makes a low, you draw. And then we want to see what happens at the high. This is our level of interest. This is our level of interest. It's very straightforward support resistance trading. So here, we want to see, wow, selling resistance. That's it. All right, and here we want to see buying support. All right, you see this low? Price goes to this low. Sweep, buying. Price goes to this high. Sweep, selling. All right? Now, so the first thing is you have your support and resistance levels. And many levels you can use. Just use any higher time frame. It's not rocket science. All right? So step number 2 is a change of behavior at higher time frame support and resistance model. This is just one style of trading, folks. There's another very, very good style which is based off of volume profile levels. Very strong levels that give massive trades because it's used on the daily, like strong levels on the daily with volume profile. What happens is it just blasts off and gives massive reward to risk. I've already checked it multiple times, and it's basically the best reward to risk and all of that stuff. All right. So anyway, so this is the short-term pops. All right, what I'm showing you here. I'll go over the volume profile stuff later. Anyway, this is right here is the basic support resistance everyday support resistance. All right, so trades. So anyway, so now step 1, levels from higher time frame. Step 2, change of behavior. Now step 3 is the execution. This is the hard stuff, because this is trading. The rest here is analysis. The rest is analysis. The execution is the trading. So in the execution, there are 2 entry models. Actually, there's 3 entry models. So what happens is, it goes down, sweeps, goes up, it pulls back to the demand zone, and it blasts off. It tests like the pivot low demand zone. The other thing that can happen goes here, respring, and go. So this is the demand zone. This is spring. And the opposite would be the upthrust entry. So right now, especially summertime market, you're going to see a lot of this, spring and upthrust. Because the ranges have contracted and all that stuff, right? So this is a very good model. Spring and upthrust entry and demand and supply zone entry. There is a third model that is very good on the ES. Specifically on ES, where it'll go here, goes up, and pulls back to a high volume level, a HVN or a POC. All right? And goes. So for execution, when it comes back down to this demand zone, you need a green bar reversal. You cannot just enter or catch a falling knife. You need price to pull back to the zone, and you need a reversal bar, green bar here. Here, you need a big green bar showing you that it's coming back within range. Again, coming back within range with a big green bar. I don't know how else to say it. Back within range with a big green bar. And here, you just need a green bar at the POC. So these are the 3 entry models, right? So we have step 1, levels, which is this more generically is your setup. Whatever setup you use support resistance levels, volume profile levels that are strong from different time frames. There's this setup after setup after setup. So really abstracting it a bit, you have setup. This is your signal. So you have a setup, always on a higher time frame. Always on a higher time frame. And you have a signal always on a lower time frame. And then, after the setup, you get the signal, you have your entry execution, your entry procedure. Or whatever you want to call it. It's all part of your execution. This whole thing is execution. You have to also know how to take profits at scale out. Right? And it's not rocket science. Like, people make it out to be and all that, but it's setup, signal, execution, which includes both the entry and the exit. I've showed the entry here. For exit, you could scale out. You could scale out. There's multiple ways of scaling out, right? You go higher highs, scale out using Fibonacci extensions. You could scale out using, getting stopped out by just moving your stop, trailing stop, multiple methods. Whatever, the point is only use the one that you're comfortable with, because other methods will not work until you're comfortable with them. All right? So you have your setup, signal, execution, SSE. I've showed the setup, the spring and upthrust. The signal, what happens when you have a spring and upthrust. And execution, how to enter after you get a signal, how to enter. Okay? Now one question you're going to get is there another entry execution procedure? Of course there is. Some folks, what they'll do is, instead of it going to a demand zone, instead of it doing a supply upthrust, or instead of POC, they will look for a pullback and a reversal that crosses, say, the 9 EMA or a 20 EMA, whatever they're using. Or some will look for a candle entry, whatever. There's a lot of entry procedures. I'm just showing common ones that happen all the time, and I've just given you like 3 examples just today, right, of spring and upthrust entries. So whatever, some folks will look for the candle entry executions, others will look for moving average, cross down, cross above, others will look for it to get oversold a little bit and then reverse up, others will look for a Fibonacci pullback, others will look for, and it goes on and on and on. But these are 3 entry execution methods. Just like you have multiple signals, you have multiple execution entry procedures. I'm just giving you the overarching method, which is setup, signal, execution, where the setup is spring and upthrust, but it could be whatever it is that you do. The signal is this change of behavior, sign of strength or weakness, whatever you call it, or koch or whatever it is. But you could have something else. And execution, I've given the 3 entries for execution entries off of a. The reason why these are good is they're very low risk. These 2, right? The reason why they're bad is because if you have a good market, it won't pull back that much. It will pull back maybe 50% or pull back a little bit and go. So you just have to, if you're using these 2, you're not going to get in all the time. You're not going to get in all the time. It's working right now, especially the spring and upthrust one is working especially well because of the summertime and because low volatility and all that. All right. Otherwise, it's going to pull back a little bit and just go to, for example, crude, right, and then go. So you have to put your plan together in terms of these 3 things and execute it. All right. Remember, there's many different setups, many different signals, and many different execution procedures. The key is using the one you're most comfortable with and refining it so you know exactly what to do and limiting the risk. All right, and there has to be some logic to it. You're not just taking some willy-nilly. It has to be something concrete. Right. So, for example, you might have a high time frame at resistance, lower time frame breakout, and then execution, how you enter that lower time frame breakout. So that's another one. All right. That's all, folks. Take care. Bye.